Crypto might be about to get something it has been missing for years. Not another meme coin, not another influencer narrative, not another 100x AI coin, actual regulatory clarity. And I know that sounds boring, but boring is where actual real money starts positioning. Because if the Clarity Act passes, it could change who is allowed to build, who is allowed to invest, and how crypto finally plugs into mainstream finance. So here's what actually happened. The US Senate Banking Committee just advanced the Clarity Act. This is one of the biggest crypto market structure bills in the US, and it cleared committee in a 15-9 vote, with all Republicans and 2 Democrats supporting it at committee stage. But this is not law yet. That matters. It still needs to survive the full-scale Senate, House reconciliation, and the rest of the political process. So this is not a victory lap, but it is a serious signal. For years, crypto in America has basically been stuck in this regulatory fog. Founders didn't know what they could launch, exchanges didn't know what they could list, institutions didn't know what they could touch, and retail got caught in the middle. And when the rules are unclear, capital waits, builders leave, and innovation either slows down or moves offshore. So the big deal here is not just regulation, it's permission. Permission for bigger capital, bigger companies, and more serious infrastructure to enter crypto without feeling like you're walking into a legal minefield. So what does the Clarity Act actually do? Very simply, it tries to create a rule book for digital assets. The bill itself highlights it is an act to provide for a system of regulation of the offer and sale of digital commodities by the Securities and Exchange Commission and commodity futures trading, to amend the Federal Reserve Act to prohibit the Federal Reserve banks from offering certain products or services directly to an individual. The simple version is, the bill tries to separate digital commodities from securities and to create a platform for brokers and exchanges to operate under clearer rules. And that distinction is huge, because if every token is treated like a potential illegal security, then the industry can't scale properly. But if there is a clear path, then exchanges, projects, funds, and institutions can actually plan and position appropriately to the rules. But there is one part of the bill that has caused a massive fight: stablecoin rewards. Banks are worried that if crypto companies can offer yield rewards on stablecoins, deposits could move away from traditional banks. So the compromise appears to be something like this: passive stablecoin yield restricted, activity-based rewards potentially allowed. In other words, you may not be able to just sit on stablecoins and earn bank-like interest, but crypto companies may still be able to offer rewards tied to usage, trading, transactions, and other activity. And that matters because stablecoins are one of the most important bridges between crypto and mainstream finance. And markets clearly understand why this matters, because regulatory clarity is not just a legal story, it is a capital market story. After the committee vote, crypto-related stocks like Coinbase move higher, because if institutions finally understand the rules, they can build products, they can allocate capital, they can custody assets, they can list markets, they can integrate stablecoins. And that is when crypto starts to move from speculation to infrastructure. And this is the part I think people may be underestimating. The Clarity Act is not happening in isolation. The SEC is readying plans for trading crypto versions of stocks, as reported by Reuters. Business Insider reports on the SEC's plan to allow tokenized stock trading. And the SEC itself is preparing an innovation exemption for tokenized versions of stocks. So whether or not every detail of the bill survives, the direction of travel looks pretty clear. Crypto is being pulled into the regulated financial system, and that changes the game. The bull case is simple. The Clarity Act passes, crypto gets a clearer rulebook, more institutional confidence, clearer exchange listings, better token classification, more compliant products, more stablecoin integration, more US crypto innovation, less regulation by enforcement, more tokenization experiments. And that could be especially important for assets and sectors that have been stuck in the regulatory uncertainty. Bitcoin already has more clarity than most, but for Ethereum, Solana, XRP, DeFi, tokenization, stablecoins, and on-chain applications, clearer rules matter a lot. Because the next stage of crypto won't be about retail speculation, it will be about regulated infrastructure. But we also need to be cautious. This is not automatically bullish for everything. The bill may not pass. There may be a Senate floor fight. There may need to be House reconciliation. The midterm election timing could have impact. Ethics and conflict disputes, anti-money laundering obligations, DeFi treatment, stablecoin reward restrictions, and many other political fights may yet await. Some Democrats supported it in the committee, but may not support it on the Senate floor without changes. There are concerns around anti-money laundering, conflicts of interest, stablecoin rewards, and whether DeFi is actually protected or quietly pulled into financial regulation. Even if it passes, regulation usually creates winners and losers. Big complaint players may benefit, smaller projects may struggle, centralized exchanges may need to adapt, and some DeFi protocols may face extreme pressure. So this is not simply regulation good, number go up, it's more nuanced than that. My real take is this. The Clarity Act matters because it signals that crypto is moving into a different phase. The early phase was pretty chaotic. No rules, no clarity, massive speculation, enforcement after the act, but the next phase looks more institutional, more regulated, more boring, and probably much larger. That's usually how emerging markets mature. They start chaotic, they get overhyped, they crash, they get regulated, and then the serious capital arrives. So if you're thinking about positioning, like I talked about in a recent video, the question is not just, will the Clarity Act pump crypto next week? The better question is, what does crypto look like if the rules become finally clear? But as I mentioned in my last video, which you can check out in the link below, retail often misses the point. They wait for confirmation. They wait for headlines saying, crypto is officially safe, institutions are here, regulation is solved, and everything is obvious. But by the time that something is already obvious, most of the positioning has already happened. So for me, the Clarity Act is not just about law and regulation. It is a signal that crypto may be moving from speculation to infrastructure, and that is a very different market. So I'm curious what you all think. Is the Clarity Act the beginning of a real regulatory turning point for crypto, or is it just another political headline? Drop your thoughts below, and if you enjoy founder level breakdowns on crypto, regulation, AI, and other emerging technological and financial markets, please like the video and subscribe to my channel.